Have you ever wondered why you're paying for title insurance when you're purchasing a home? Well, today I have my good friend DJ here, and we're going to go over that and a bunch of other stuff related to title insurance. So first off, DJ, thanks for agreeing to do this.
Hey, Ty, thanks for having me. It's going to be fun.
Absolutely. So real quick background, DJ and I have known each other since college. And then as we exited college, we both went into the real estate industry, specifically title insurance. DJ has remained there for over 20 years, right?
Sadly enough.
And I have moved on to the mortgage industry. And today I think it's super valuable for people to understand what they're doing when they're purchasing title insurance, what the limitations are, what the benefits are, and a few insider tricks that DJ has learned over the last 20 years that are going to help you when you're moving through your transaction. So for me, if you want, just kind of give everybody a brief overview of what title insurance is, what purpose it serves in the industry, and then we can kind of go from there.
Sure. So as you remember from trying to explain to people what title is, nobody really knows what it is. It's kind of like this under the radar type industry that most people don't have a clue about. So there's really two facets of it. I'll try to hit the broad strokes and then we'll dive deeper, if
Absolutely.
you're interested.
Yeah.
But the way I try to explain it to people is title, when you buy a piece of property, title insurance protects the new owner, the buyer, from anything having to do with the previous owner or any previous owner for that fact. And when I say that, I mean, when you own a home or a piece of real estate of any kind, there's many types of things that encumber that. And like, for example, the taxes, right? Your tax bill is tied to your property. If you don't pay your taxes, they have foreclosure rights. Most people have a loan. If you have a loan, there's a lien on the property and they have foreclosure rights. If you don't pay your child support or you don't pay your income taxes, these can lead to liens being filed on the chain of title of that property. So the property is collateral for all these items. And essentially, we have to make sure to unattach all those items prior to transferring it to the new owner so that they don't become responsible for somebody else's debts.
Right. And when you think of insurance, you're thinking, okay, I'm going to pay for my insurance today and it's going to go forward. Title insurance, like you mentioned, is going backwards and it's protecting both the new homeowner and for most people, unless they're paying cash, whatever lien holder that is, whatever lender that is. I know they're separate policies, but they're also being protected because they're lending money on a property. They want to make sure there's no clouds on title. It's clean title and then the property is insurable. So first off, you work for what company? That might help.
This is the third company I've worked for,
Okay.
but I work for Fidelity National Title. We're the nation's largest title insurance company. We own other title companies like Lawyers Title, Chicago Title, Ticor Title, Alamo Title, and that's just in the western half of the United States. Throughout the rest of the country, we have a bunch of smaller agencies and whatnot.
And in your opinion, I mean, I know like when we were at Equity Title and then we moved on, why do you think it's so important? I know why, but I want you to explain it. When people are buying their policy through Fidelity, you kind of mentioned it as far as the biggest. How does that come into play when they're actually purchasing that insurance from you? Is it a better policy? Do you have more reserves to back it up? What do you think sets you guys apart?
Yeah, so it's a great question. Yeah, I mean, a policy really is only as good as the company that's backing it, right? If you have a small company backing your policy and they go out of business or they sell to somebody else, you kind of get lost in the mix. We are the nation's largest title company. We're, I think, 326 on the Fortune 500 list. We have 1.9 billion in claims reserves, which is higher than anybody else in the industry. So,
which is huge,
you're safe
right?
with us.
Yeah, absolutely. And it's funny. Like I told you, I love it because, well, A, we're friends. I can do this anyways. But I'm sure with most of your clients is if I have a question, I know I'm going to be able to A, get a hold of you. B, you're going to have an answer. And then C, if you don't, you're going to know who to talk to. So, and that's really big for me. I mean, when we're doing any of our investment transactions, any of my clients that are doing loans, I want to know that when I'm putting them with their title insurance company, that it's somebody who is reputable. And if there is a claim that needs to be paid out, it does get paid out. I think I mentioned to you, I've had a scenario to where people, like anything, they try to save money. Oh, let's cut money by going with a cheaper title insurance company. And sure enough, when they've done that and they had to file a claim, the result was not what they were looking for. And they were kind of, left holding a fairly decent sized bag, I guess you could say, as far as their profits were diminished because they didn't get recouped. So for me, I know that we have different policies, right? We have an owner's policy and we have a lender's policy, and
Correct.
then we have endorsements. So what does the owner's policy cover? What does the lender's policy cover? And then what kind of endorsements should people at least be aware of if they're the average everyday Joe homeowner, if you have an example?
Sure. So the owner's policy is essentially what I was discussing, right? Where we're protecting the new owner from anything having to do with the previous owner. That's an owner's policy. There's also a loan policy. So anybody who gets at least an institutional loan, every institutional lender will require a loan policy as well.
Okay.
And the loan policy, that protects the lender, right, from anything having to do, basically it ensures their position, right? So it ensures the vesting. It guarantees them the person they're lending money to is in fact the owner of the property, which, there's errors made there all the time as well. So it guarantees that. And then it guarantees their position. So when I say position, if you're a first position loan, right, you're the first in line to foreclose. If you're a second position loan, you're second in line to foreclose. And so if you're coming in as a lender, as a second position lender, you want to make sure there's not already somebody in second position. And you want to guarantee that it's, nobody else is already in your position.
Absolutely. And so this is something that I heard recently, and I'm curious if there's a way to get around it. So in the lending industry, there's somebody that I follow, and they mentioned that there's sometimes a borrower who can fund, let's say 2 or 3 times. Let's say there's no lien on the property. Let's say they own it outright. There's been instances where somebody has got a refinance with 3 different lenders, structured it to where they've closed on that same loan within 1 or 2 days. So by the time it's recorded, nobody's the wiser. That's probably one of the most recurring themes that I've seen when I've been talking to other lenders and hard money lenders, getting my hard money business started. Is there a way that you can escape that? Or is it, hey, that's literally why you have title insurance, to protect yourself from something like that?
That's literally why you have title insurance. Because when I say position, right? So say somebody's getting a second position, they're getting a second on their house, right? That loan should take second position, right? Well, aside from a title company guaranteeing them that position, in reality, that position's created by the order in which loans were recorded on the property, right? So the first loan, as far as dates and time, right, that was recorded, takes first position. The next loan to be recorded on the chain of title takes second and third and so forth, regardless of where these lenders expected to be.
Okay.
Right? So we create that guarantee when we say you're getting second position.
Okay.
Further, we have something called plant date. I don't know if you're familiar with that. It's been a while.
It has been a while.
But plant date is essentially the date that all records are current until.
Okay.
And so here in Orange County, right, it takes the County of Orange 10 to 14 days to update their records to make them searchable. So if I record something today, right, not even at my title company can I see it for 10 to 14 days.
Okay.
So for your scenario, right, somebody records several loans that record within days of each other. The title companies can't see that. That's blind. So that's one of the risks that we take, is that 2-week gap where we don't have any information.
Okay.
And so for us, we get losses on that kind of stuff all the time, right? But that's the cost of doing business. For an individual property owner, that could be catastrophic.
Oh, absolutely, right? I mean, if they don't have the insurance, or they have cheaper insurance and they're not covered,
right,
you're in trouble. And that was what was interesting to me. I was like, I do know, for me, I use Property Radar. I know you guys have your own property profile service, and if you're searching for a house or something, there is that gap, and it's called plant date, like you just mentioned.
Today's plant date would run 10 to 14 days behind today's actual date.
So 14 days ago, something records. You'll probably see it first today, and then that's when the issue would arise, and then they would contact. I never even asked this, and I don't even know, because in my time in title insurance, I never had a claim filed. Who do they contact? Do they contact you, or do they contact? Is there a number on the prelim? And the prelim, you can go into what a prelim is too, but is there a number on the prelim? How would they file a claim?
We have a claims department.
Okay.
It's in Nebraska.
Okay.
There's a whole team of attorneys there to help settle those claims.
Perfect. Okay. So for you, when we were discussing doing this, I was curious too. Like for me going into this new hard money venture, like what should I be looking out for? Like what are the most common things that perhaps in the conventional space that I'm not really aware of that are more common in the hard money slash investing space? Do you have any insight as to like what that is for anybody like myself who's starting a hard money business? Any like, is there a higher risk for fraud? Is there a higher risk for properties that I guess are uninsurable? Is there anything different, or is it pretty much the same as any other transaction?
From a title standpoint, we handle it the same as it's any other
Okay,
transaction. But from a lender or a borrower standpoint, no, it's definitely more high risk. In hard money, you have to ask yourself, why is this borrower willing to pay, right? Higher
absolutely.
rates to get this hard money loan, right? What is their situation? Obviously, there's more risk in a lot of those situations. Maybe they don't qualify for a conventional institutional loan, right?
Absolutely.
And a lot of these hard money lenders aren't big financial institutions. They're small businesses or private investors, entities like that, who maybe don't have a long track record of doing this. So they don't have the policies and procedures in place to circumvent the risks. They don't have as stringent underwriting guidelines, which again is why these borrowers are coming to them, right? Because they didn't qualify for the conventional loan.
Absolutely.
So those are some of the risks,
Okay.
and having a good partner as a title company can really help navigate those risks because we're going to look out for ourselves, and in protecting ourselves, we're going to protect everybody else. And some of those risks have to do with making sure the taxes get paid through the transaction. We don't want anybody to get liable for that. Searching and guaranteeing that vesting, right? Borrower may come to you as a lender and say, hey, I own this property. They may not tell you that they own it with a partner or with a brother-in-law or a cousin. They may not tell you that, they used to have somebody on title that no longer is, that's still going to try to claim title later, right? So there's all kinds of reasons to have that vesting guaranteed.
Okay.
Further, the scenario that you said, right? You're going to lend your money thinking you're coming in at second position, and there's they're approaching two other hard money lenders at the same time, right? They're going to fund within days of each other. You guys could all be, Rochambeauing for foreclosure rights and lien
Right.
position, right?
Which is scary when it's my company, but it's my investors' money, and I'm like, okay, I better make sure that I'm dialed and I know exactly what I'm looking at when
Yeah.
I do it because it's, let's say, a $500,000 loan. That's a lot of money for my investors.
And you could get your property profile through your favorite platform.
Yeah.
You could even get a full preliminary title report from me or from another title company. But that title report is 2 weeks old. The information on there, we update it today, right before we record your loan, but it's still, the information on it is 2 weeks old. So we're going into it blind. But for us, that's the cost of doing business. For you and your investor, you don't want to incur those losses.
No, and like you said, one of those could be catastrophic for an individual or even a company. And what I do like, and you just mentioned, and I think, after doing this for this long, I've worked with different title companies. You are still, to my knowledge, I know for me at least, you're the only title rep that ever looks at the prelim. Yeah, I'm serious. Emails and says, hey, Ty, this is what we're looking at. This is what you have. Looks like it should be a clean transaction. Boom. A lot of times my bet would be that a lot of agents and or lenders don't even really look at the prelim. It's like a checkbox on do we have a title prelim? Yes. Boom. As long as it passes the lender's check, like a wholesale lender, they're fine with it. But do you find that a lot of agents are even reading their prelim? Or I guess your clients, are they relying on you to read it for them and let them know if there's any issues they should be aware of?
Yeah, so thank you. I think I'm one of the few that actually
For
reads
me,
it
it's
and
100%.
understands
Yeah.
it. Most of my competitors are, I guess, for lack of a better description, are more marketing reps. They go out
Okay.
and hand out cards and promote the company, whereas I try to take a more hands-on expertise type approach. So yeah, I proofread everyone. And my clients do rely on me for that. They do depend on me, and that's why a lot of them use me. Because yeah, I don't think most people read them, and they assume that the title company has read it and would alert them if there's any issues. But I assure you, that's not the way the title
Right.
process works. unfortunately, we do title reports for so many different reasons. We do them sometimes for the city. Somebody's going to go get an ADU on the property and the city's asking for one. So we'll issue them for that. Sometimes people are going through a divorce and so they want to have a full preliminary title report for their attorney and their settlement. So we issue them for that. Sometimes people are just doing a research project, trying to figure out the easements on their property. So we do them for that. The point I'm getting around to, right, is we don't know which ones of these are going to actually be a transaction and which ones are actually going to close. So when somebody opens a title report, it goes to our production facility in Arizona and they search it and they send it to us. And it goes on the side. It goes on the back burner of the title unit, the title officer's desk, and they don't even look at it until escrow calls them,
Right.
usually a week, sometimes 2 if we're lucky, before closing, saying, hey, we're getting ready to close. Can we address items A, B, and C? And they say, oh, yeah, perfect. Here's what we're going to need for that. Here's what we're going to need for that. But until escrow makes that phone call, there's nobody on our end being proactive. It's just on the back burner, except for me, of course, right?
Yeah, you're looking
I'm the
at
one
it.
who's looking at it because I want to look out for my clients and make sure that if there is an issue and it's time sensitive, we get ahead of it.
Right, and I think we did that on our most recent transaction, or one of them is there was a lien filed by the city of Dana Point, I think.
Okay.
And you let me know in your email. I called my client and said, hey, what's going on? They explained that it was gone or should be gone. You talked to whoever, I don't even know who you spoke with at your company, and then boom, that was removed from the prelim. So I think it's huge, and I think a lot of people wait until the last second, or they wait for somebody to tell them like a week before closing, hey, there's an issue on the prelim, we can't close. When in reality, not only has the title unit had it, but the agent has probably had it just as long. They've just never bothered to look at it because, or even the lender, not just agents, even the lender doesn't look at it because, hey, if everybody says we're good, we're just going to let it continue. But sometimes that can really bite you if you're not looking at it and there's a big issue. So I do think that separates you. Your knowledge separates you. After 20 years in the business, like anything, you start to accrue all of this expertise. And in the market that you're in, I mean, you're in a high-end market, a highly competitive market in Newport Beach, to where a lot of the purchase prices of these homes are a lot larger. There's a lot more at stake to that effect. And it's like a little slip up like that could cost somebody a lot of money, or if it costs them a deal, it can cause the lender or the agent a decent amount of money too. So like you mentioned earlier, even when I was doing title, a lot of it is marketing, right? You're going out there, you're pitching most everything but title insurance,
Right.
right? It's like, you're not like, hey, let me tell you about this Alta policy. It's like, hey, how can I help you grow your business? But I do think that you've differentiated yourself and that you understand what's going on. You present yourself as a professional, and I think it matters. And I'm sure in your market, it matters in any market, but specifically in a market like Newport, or let's say like New York, any high-end market, it's even a bigger deal.
Yeah, absolutely.
Nice. So when we're talking about different policies, I know we discussed owner policies, and for something that like I mentioned earlier is there's the Alta policy. There's there's the Eagle owner policy. I think is a branding thing too, right?
Yeah.
When somebody's getting an owner policy, and granted, most of the time, I guess we should take a step back. So let's say I'm Joe home buyer, I'm buying, or I'm Joe home seller, I'm selling a house. They usually pay for the owner's policy, right? And the way that things works is that's what's going to happen, and the buyer usually covers the lender's policy. Is that correct?
Correct. Yeah. It's customary for the seller to pay for the owner's policy. It's part of delivering clear title to the buyer, just as the borrower delivers clear title to the lender.
Perfect. And then so to that point, there's different types of policies that
Correct.
you can get. And again, I want to emphasize, this may not sound exciting when the person's selling their house, but if they ever need it, they need to know what the differences are. So are there different levels to insurance? And if so, kind of you want to go over that a little bit?
Yeah, I mean, I'll touch on it briefly.
Okay.
There's really 3 main types of owner's policies. There's the ALTA. ALTA stands for American Land Title Association.
Okay.
There's the ALTA homeowners policy, or the ALTA HOP, right? And that's the extended coverage. That's the maximum coverage policy in the industry. You can't even, on commercial properties, you're not going to get that kind of coverage. That's the maximum coverage. First, you said Eagle, First American.
Yeah, sorry.
They call it their Eagle policy because the eagle is their mascot or their logo. But that's the policy we issue unless otherwise specified.
Okay.
So when you get a policy with us, you're getting the best. And when I say unless you specify, right, there are two lesser policies. There's the ALTA owner's policy, and there's the CLTA, California Land Title Association owner's policy. And they kind of go down in that tier. So the HOP has the maximum, the ALTA has the second amount, and the CLTA has the least. And the time when you would only get like an ALTA, right, is if you're buying the property as like an LLC, right? An LLC, for whatever reasons, it doesn't qualify for the homeowner's policy.
Okay.
So you wouldn't be able to get that. You'd get, the ALTA. And if you're raw vacant land, you don't even qualify for the ALTA. You have to get the CLTA.
Okay.
And there's a lot of, we got lists and lists of coverages that are in there. And then you mentioned endorsements before. And an endorsement is essentially just an a la carte coverage, right? And some of them are actually free. There's a whole schedule. Some of them are free, but they have to be specifically requested. And others are like $50 up to like, thousands of dollars, depending on what the coverage is.
Okay. And then, like you mentioned, people think they're saving money when they're requesting like a CLTA policy on their home, which they are, but you're also getting reduced
about 10%.
coverage. And so that was going to be my second point is like, let's say that translates to $500 we're in Orange County right now.
Yeah.
Average median home price, $1 million, right? Like in most neighborhoods, over $1 million, you really want to save maybe a couple $100 on your insurance policy
Right.
with an investment of $1 million.
For $1 million, don't quote me because I don't have a rate schedule in front of me.
Yeah.
But your owner's policy is probably going to be like $3,500.
Yeah.
So you're going to save like $350 to get like a very substandard policy, in my opinion.
Yeah, and that's what's, we've been doing this long enough. People want to save money. The consumers want to save money. We realize that. But at the same time, I think if it was ever explained to them, you're going to pay $350 less, but your coverage is this
150% of the liability amount, which is
crazy.
For an owner's policy, it's the value of the home.
So that's a huge deal, right?
Huge deal.
Okay, and outside of, like you mentioned, like there's things you do like the prelim review, things like that. How often are you communicating with your clients outside of that? Just like letting them know if anything's going on. What I love about your service too is, I don't know if you still have it, but on djbibb.com or whatever it was, I could go with any order that I place with you. And then I can also check to see if that file is recorded for that day.
You can, yeah. And any Fidelity order doesn't just have to be one of mine.
Okay.
I hope it's one of mine. But any Fidelity order like in the country through this portal, you can check the closing confirmation.
Awesome. And for those that are not, we'll have homeowners, or if I'm doing a refinance for somebody, they're going to want to know, hey, is it closed yet? Is it closed yet? So what I used to do is I would call escrow, and then escrow would be like, I'll have to get back to you, and then I'll email you back. Once I started to learn that, I'm like, well, let me check right now. Oh, boom, it has recorded. And as long as I don't steal anybody's thunder, I'll let them know, hey, yeah, your file's closed. I think it's a huge service.
Oh, it's huge for me. This is the first company I've been at that has that. And I'll be on my cell phone, like on the golf course or wherever I am that day.
Usually on the golf course.
having somebody like yourself say, hey, is my file recorded yet? Rather than waiting on hold myself calling my office, right? I just refresh on this app and I know the second it closes.
And I think that's huge, and it can't be like, overstated. It's those little things that you do to separate yourself that I think are huge. But outside of everything that we've discussed, what other services do you provide as far as like value add? So like, let's see, like I know I'm dating myself, but back in the day we used to have customer service, and then, hey, let's get a list. Let's get a bullseye list, I think is what it's called. Granted, technology has advanced way beyond that. So I guess how can they lean on you in order to help grow their business? And what do you think is something that you help provide that maybe agents out there aren't thinking of? Like, hey, I didn't know my title rep could do that.
Yeah. Great question. So there's a lot of things that I do, and not all of them I'm allowed to, really talk about because technology has gotten so great. We don't just give the mailing lists out, right? Say, oh, here's your farm list, right? We actually have ways now through technology to sort them and fine tune them and really focus them on what that buyer, seller, agent, whatever they're really looking for. We help them hyper focus their marketing efforts to generate a higher rate of response And to save on those marketing costs, why do you need to, send to 5,000 people when we can reduce that to 500
Right, with all the new data points.
with all the new
Yeah.
data points?
You used to do
Right?
it, yeah.
And with technology, right, you have all these automated systems where you get your automated vesting from the platform, right? Well, a lot of my clients rely on me because that's an automated vesting. All that does is pull the most recent deed. I was actually dealing with that on my way over here. Somebody called me like, hey, this person that sold the house is showing on title. What was the mistake? I'm like, oh, well, there was a corrective deed recorded, a few days after the sale. So it looks like that person's ex-spouse, gave it back to that individual, the seller. It looks like they still own it. But really, if you look at the chain, right, you can see the deed before that was an actual full value sale. So there was no error, right? But the automated system just pulls the most recent deed.
Right.
So I always tell people like, don't trust the automated systems are convenient, but don't trust them. Call customer service, call me, have us like actually look at the chain and verify everything before you write your contracts, throw the property on the market, and get yourself down the road.
Yeah, and that was something too, I think, with another property that I had was I saw a lien appearing on the house that I was involved in, but it was actually tied to their primary residence. And sometimes that stuff happens. Addresses will get mixed up, things like that. And then I called you and I was like, hey, are we good? You said, wait for the prelim to come in. Let's look at it. It came in. It was clean. And there was no issue. But like you mentioned, it was on I think it was property radar. And it's always you want to verify, right? So get the information, verify with an expert, and then we were good to go. So I know for me, starting this new hard money business, I want to make sure I'm protecting everybody's assets. And like, obviously I've always used you. I will always continue to use you. And this goes into that marketing. So like if there's a lender out there, an agent looking out there, it's one of those things where I know that I can rely. Like let's say I want to target every single LLC that's purchased a home in Orange, LA, and San Diego counties within the last 90 days, and it's either a cash or maybe they took title in the form of a vesting of an LLC. That's something that you guys can easily handle, right? You guys can help pull the list and refine it, and we can pare it down. And before, like I said, you used to get 8,000 of them, but I know with AI and things like that, they're able to pair that 8,000 person list to like 3,000, which you're going to save a ton on marketing costs. Are you implementing, or are you aware that you guys are using AI to help refine all of these things? Like I know there's like a predictive seller thing that some companies are marketing.
We have that, yeah.
Okay.
We actually created that. So
okay.
Yeah, we've been using AI for quite a while. For that one, it's just an algorithm, but we use AI as well to create these predicted next sellers. And it's fascinating the results I actually see out of that. Like, for example, somebody asked me to run this specific community, and it came up out of 600 homes, came up with 3 predicted next sellers. And I happen to know one of them.
Okay.
Right. And he's owned his house for 20 years. There's nothing that I would think would indicate that he wants to sell, other than the fact that I know him and he's been trying to convince me to get my mom to sell her house, sell him her house.
Okay.
And she doesn't want to go anywhere. I'm like, that is the weirdest thing ever.
It's
But
crazy.
He's one of 3.
And do people take advantage of that? Like any of your clients, are they jumped on board?
They
I'm
have.
sure you use that as an example too.
Oh yeah, I use that as an example. And
Yeah.
So yeah, my clients use those all the time, especially when they're looking for a buyer, right? They have a buyer need. They're cold calling, trying to surface these sellers, right? So we have that. We also have, I have to say this correctly, we've got platforms that I can refer them to
Okay.
where they can pay a couple of cents and get phone numbers, email addresses. They can do ringless voicemail campaigns where they just leave the entire neighborhood a voicemail.
As long as they're TCPA compliant.
Exactly.
Yeah, and so that's the funny part too. So like with I've always been doing lending, but with like flipping, we used to do something called list stacking. And at that point, like in 2017, we thought we were so far ahead. We would take like different data points, right? So I would take, 92679 is a zip code in Orange County. That's Codo and Tribeco Canyon. Then I would look at, I want to pull every house in 92679 that has a water shutoff lien. because for me, I knew that was indicative of somebody who was going to need to sell and probably at a distressed price. Because if your water shut off, can't take showers, can't run the sink, that was something that was pretty big. And then I would take, oh, is this person also an absentee owner? Okay, well, if they're an absentee owner, they're probably a landlord. If the water shutoff is there, maybe their tenant's not paying their water. And my bet at that time, and still is, if they're not paying their water bill, highly unlikely that they're paying their rent, right? So I have those two things. And we would stack all of these things manually. We would basically do it on our own, and then software came out. And then AI, do you know, and it's okay if you're not sure, but do you know if some of those data points, like of an investor, I guess is what I'm getting at, can an investor say, hey, DJ, I know that if I have an absentee homeowner, I have a water shut off, and then you mentioned it earlier, tax delinquents have been my number one moneymaker on real estate investing, bar none, not even close. Can we run those 3 data points, and can you pare that list down for me and then provide me with that raw data?
The water shutoff is going to be a sticking point. That's going to be a tough one to
Okay.
find. Those we can find on a one-off basis. Like
Okay.
if I do a title report on a property, it comes up, but on a mass scale, no, we can't.
It would be harder.
That'd be harder.
Okay. And I know
But
that
now you have me interested in trying to figure it out.
we can talk offline how I did it. But yeah, no, it's huge. And I guess what I want to make sure is that people know that, like, title reps, you have to think, this is the way I thought of it when I was one. And then now that I know on the other side is, you are the gatekeeper of so much information because it's in your best interest as a title company to know all of the liens that are recorded. You see all of these transactions, and it's like anything, right? The more data that you can look at, the more of an educated guess you can make on so many things. I just think that people don't rely on you guys enough. Like, hey, I have an expert in the field and he has access to all of this data. Strike up a conversation with him, right? Like, reach out to DJ and be like, hey, this is what I'm looking to do, grow my business. I heard your story about the predictive sellers and it's very accurate. Here is my farm. Like, when way back in the day, my aunt was in Campmar and Mirador, which are both communities in Laguna Niguel. But if she knew, hey, it's these 6 houses in this community, these people are most likely to sell, that's when you go from a mailing to a door knock, a call, or something much more personal and let them know I'm here, right? Yeah. As many as you can.
If there's a death, a divorce, a life event like that, notice of default, all those things would trigger those.
And you're able to get those.
Absolutely.
Those are easier, right? And those are also very indicative of somebody that needs to
Call those
sell.
life events, and we can sign people up to get an automatic notification anytime one of those occurs within their farm.
Perfect. And that's including probate. I'm assuming
Correct.
that's one. Okay. So for those of you out there that invest, and that's a lot of the people that I'm working with currently, is probate used to cost a lot of money to get to. They would have to have separate services that you would pay $500, $600, $700 a month just to get all of the probates for Orange County. So that's something that they can leverage, hopefully you or their title rep.
Yeah.
Hey, this is what I need. This is my target market. Okay. All right, so this is kind of a selfish ask is, like I mentioned with the hard money liens, we're going to have contractors going in there. We have construction draws. Talk to me about mechanics liens. I know it's going to be more prevalent in what I'm about to do, but also for everybody else that's out there, if maybe they're having work done on their house as a homeowner, or if there's somebody who is flipping the property, or if they're like myself, if they actually are the lender on that hard money deal.
Sure. Great question. So yeah, mechanics liens are probably one of the biggest areas where title companies see the most frequent losses. Okay. And that comes from what we call loss of priority, which, as I explained before, is like the pecking order for a lien, right? If you're a loan in first position, you're number 1. If you're in second position, you're number 2, right? Well, a mechanics lien, right? If you're getting work done on a house, anybody can file a mechanics lien. It does not have to be the general contractor. It can be a guy who swept up. It can be anybody who touched the house, right? So while there's being work done, or while their work was recently done, there's always the potential that somebody could come in and file a lien, and it seems to hit the chain of title like out of nowhere, right? So you're a lender, you're getting ready to fund a hard money loan, and in that 10 to 14 day plant date gap of information, a mechanics lien could hit. And that's going to affect your lien position, right? If you're coming in as a second position loan and they're coming to you for more money because they're doing work on the house, because they can't pay their subs, there's a huge potential for a mechanics lien. And that could hit the chain before your loan does, and you don't even know it. So that's
Okay.
a huge reason for title insurance. If you're doing a $100,000 loan, that could be a $50,000 mechanics lien. Nobody knows, right? But you'd be covered for it. We'd have to pay that mechanics lien, or we'd have to at least pay you back. Say the mechanics lien was for $200,000, we'd have to at least give you your $100,000 back for your loan.
Okay, perfect. And then like what happens with like work that started? So let's say I fund the loan, the new owner is going through the construction process. Let's say the project drags on, somebody files it, and then when we go to sell it, we're unaware because we don't know, and then I'm trying to get my money back. The seller at that point, who was previously the buyer, is trying to get their money back. I'm sure that also comes up. And are we also covered? And I guess, do I need to purchase additional coverage to make sure that's covered, or that's part of that policy that you were mentioning?
Sure. So mechanics liens, it gets very sticky on figuring out who's going to take the responsibility, who's going to be liable, and then documenting that, right? Because as soon as we insure it, we become liable for it. So if there is currently work going on the property, a title insurance underwriter is going to be very, very careful on the potential for mechanics liens. We're going to send somebody to drive by the place. If it's over a $5 million property, we're going to send a drive by. They're going to be looking for construction fences, for stacks of materials, for any indication that there's potential for mechanics lien.
Okay.
We're going to have the owner or the builder, whoever's responsible for those liens, sign indemnity agreements saying that they will take responsibility for a mechanics lien if one arises, because we are guaranteeing the buyer, right, the new owner, and the lender, we're protecting them against that. So
Okay.
we need to assign that to somewhere else,
Perfect.
right? And so in order to do that, right, we need to understand how much liability potential there is. How big are these mechanics liens? What are the chances of a mechanics lien? So keeping accurate records is totally important. Having your build budget, having who all your subs are, having your lien release waivers. If you pay somebody for doing work, like you pay the electrician, have him sign a lien release waiver saying he's not going to file a mechanics lien, or he's giving up his lien rights. Get that in exchange for the final payment. A lot of people fail to do this, and keep those invoices, because the title company, like a loan underwriter, is probably going to want that information to understand what they're exposing themselves to.
Perfect. And that goes back to, again, if you're working with a professional, make sure that you're in contact. Ask. I think people are always afraid to ask these kind of questions, and it's better to ask it up front. Like, hey, if I'm going to do this, what should I be aware of? You
Ask
just said
me.
it. Yeah.
Always ask me. I tell my clients, if you're dealing with new construction or like extensive work, always call me. Don't wait for a title report. Don't wait for the underwriter to call you, right? Call me and figure out how to navigate this properly, so you don't end up in a sticky situation at a short timeline.
Well, we're coming up on a little bit of time, but what do you have as far as, did you want to talk about anything else? Let anybody know how they can get a hold of you?
Yeah, you mentioned it earlier, but djbibb.com or Newport Beach, fidelitynewportbeach.co.
Okay.
Those are my websites. I'm on Instagram, LinkedIn. Pretty easy to find on the Google.
Perfect. Okay, perfect. And then, like you mentioned, so your target market is Newport Beach. DJ has been there well, you've grown up there, but as far as when we started in title in 2002 or 3, whenever it was, you've been there
ever since,
right? So definitely a market expert, but I would also say that he is an expert in the title insurance industry, so it does not have to be Newport specific, right?
Yeah, we're nationwide. And that's one of the other nice things about being at the biggest company in the country is we truly are nationwide.
Okay.
So,
well, that's it for today. I hope you guys found a ton of value in this. I hope if you have any questions title related that you reach out to DJ. And thank you.
Thanks for having me.
You
this
got
was
it.
fun.
All right. Thanks, everybody.
All right.